accelerating trade and investment, unlocking public-private sector companies, reshaping the gender divide, and enabling youth entrepreneurship. There is much to do. United, we can connect trade and investment for greater prosperity. IATF, the AFC-FTA Marketplace Trade and Investment Conference, connecting African markets.
Welcome back from lunch. I hope you were able to taste the delights of Africa with the local food stores. I hope you patronize those. They will be here all week, so make sure you do the rounds when it comes to the food vendors. Now, we're coming to the sort of second half of today's trade forum. And here we will hear about Afreximbank's initiatives to drive intra-Africa trade. I mean, there are so many major initiatives that Afreximbank is either driving or is part of realizing. And we're going to have 5 15-minute presentations from 5 presenters on a number of subjects related to Afreximbank and how it's implementing initiatives to drive intra-Africa trade. I want you to give each of these presenters a warm round of applause when they take the stage. First of all, from one of the panels earlier, Omar Banyeda's panel, you heard them talk about SMEs, small and medium-sized enterprises, and how important and integral part they are of the success of intra-Africa trade in the AFC-FTA. Well, the first presentation is about Afreximbank's SME program, and to give that, please welcome the Senior Manager SME Development, Odi Akanoba, to the stage.
Thank you very much, Mark. Good afternoon, everyone. I think there's still a bit of launching going on, but I guess we have to kick off and get going. So my name is Odi Akanoba. I'm Senior Manager SME Development at Afreximbank. Today, I'm going to talk to you about Afreximbank's approach to resolving the issues that Africa's SME constituency are currently having to deal with. So, as far as the importance of SMEs are to Africa's economy, I think, as you can see, the data really speaks for itself, right? 80% of the new jobs that are created on this continent come from SMEs. That has been the case for decades, and continues to be the case. As far as GDP is concerned, half of the continent's GDP comes from SMEs as well. So this means that in theory, SMEs are actually the most important economic driver and should be treated as such. But the reality is obviously very, very different. Something like 60%, so more than half of African SMEs report that they are either completely unserved or at least underserved as far as both financial and non-financial services are concerned. And I think this goes a very, very long way in terms of explaining why over 70% of African SMEs fail within the first year. So something like 5 in every 7 African SMEs fail and never get to the point where they could contribute to our vision, which is to drive intra-Africa trade and export development for the continent. So why do they fail? There's many reasons, and I think many of these, most of these issues are very well documented. You know, we're all very well aware of the issues that African SMEs have in terms of lenders requiring collateral, which many SMEs don't have. For the most part, the cost of capital is so high, prohibitively expensive. It simply doesn't make sense for them to borrow most of the time. They're small businesses, so those who invest in them really need to be patient, but that patient capital is almost never available. The SMEs themselves, we know, require training for the most part, so capacity building and technical assistance is also missing across the landscape. An important point is really also commercial lenders, banks. We realize that there's a huge gap in terms of commercial banks in Africa having the capacity to serve African SMEs in the way that they need to be served. So giving them the relevant support, giving them the relevant products, and so on and so forth. And then there's also issues around the lack of access to trade information and other relevant bits of information that they need to be able to facilitate intra-African trade. So it is these bottlenecks that really inform Afreximbank's SME development program. So what we've done is we've examined these bottlenecks and we've said to ourselves, we're not going to shy away from trying to address each and every one of those head on. And that's how the Export SME Development Program was founded. So essentially, our principal objective as an SME team is to facilitate the integration of African SMEs into export value chains. And we're doing that on the strength of 4 principal pillars. The first one is financing, which is essentially direct and indirect financing, direct and indirect debt, I should say, depending on the size of the SMEs involved. We also have the capacity through our AFGAP program, the Afreximbank Guarantees program, to extend portfolio guarantees to FIs, which enables them to take more risk on their SME portfolios. And we also have, through the Fund for Export Development in Africa, FEDA, a venture fund which we expect to fully operationalize in 2024, which will enable us to take equity risk in high impact, high promise African SMEs on the continent. From a capacity building standpoint, we run through partners, incubation and accelerator programs which target SMEs who have the potential to export in the short to medium term. We give them the commercial skills training to plug the capacity gap that I alluded to in my previous slide, and we essentially prepare them for export. So the focus is very much on export readiness. Through our program, we are also actively trying to provide technical assistance to banks. Banks simply need to think differently about the way they lend to SMEs. There are new and innovative ways of handling SME lending. We see them all the time in other markets. Asia are doing a great job, Europe, the Americas as well. We need to start thinking about other ways of measuring SME risk rather than traditional collateral. So we're providing the support to commercial banks that they need in Africa to be able to think along different lines. As far as market access is concerned, I'm sure if you've been here over the last couple of days, you would have heard on many different occasions about the Africa Trade Gateway, which is essentially a suite of digital products which look to resolve or address the trade barriers that exist on the continent. I can see my colleague and good friend Lizanne, she's here. She will speak shortly about Trader Club, which is certainly one of the components of the ATG, but of course it comprises other instruments as well, including MANSA and PABS and so on and so forth. And then the final pillar is policy advocacy, which that there are certain constituencies that will pay close attention development in Africa is concerned. I thank you for listening.
Thank you, Odie, there on SME program presentation. The next presentation, the next Afreximbank initiative to drive intra-African trade presentation is about project preparation, and that comes from the Manager Project Preparation Unit. Please welcome Nafal Hassani Mohammed.
Good afternoon, everyone. All right, so this afternoon, I'm going to take you through a presentation of the project preparation facility that was developed by the bank to try to address the issue of the lack of bankable feasibility study and bankable project that institutions such as Afreximbank and other international investors can consider and finance. So, as you are all aware, the ACFTA has created a single African market that, with a population of 1.3 billion people and a market size of $3.4 trillion that can be tapped into by traders and producers in order to increase their intervention and be able to reach a much greater market on the continent. But for them to be able to do that, the private sector will have to actually develop a robust bankable and feasibility study to mitigate the risk of a project and market. More so in light of the fact that actually on the continent there is only 10% of projects that are developed that get to achieve bankability and financial close. When we try to analyze the root causes of this particular performance, we realize that most developers and promoters do not necessarily have the in-house technical expertise as well as the financing that would be required at this particular stage of the project in order to finance the various studies that are required for investors to consider their project. It is in light of this that the bank decided to launch in 2018 what we call the Afreximbank Project Preparation Facility. This facility is meant to foster intra-African trade enabling environment, and with this particular intervention, what we do at Afreximbank is to support the progression of projects from conceptualization all the way up to bankability and further down to financial close. Financial close being the stage at which the project is considered, the funds are actually available for the financing of its implementation. So this early stage intervention is done by providing technical assistance and advisory services, but also, and that is what is key, by providing the liquidity that is needed to finance the various consultants that will be hired for the purpose of developing the studies. So the project preparation facility is meant to play a catalytic role, in addressing the infrastructure and investment gap on the continent that is estimated at $130 to $170 billion per annum. And we do so by supporting various types of consultancies and services. So when a promoter comes to us and they have developed a project that requires additional support, we can finance the detailed feasibility studies. We can also finance the various transaction advisors, such as the financial advisor, legal advisors, and tax and insurance advisors that are required to ensure that the project gets to bankability. Further to that, we also realize that some promoters, after getting the project to bankability, they lack resources to finance what we call the fundraising phase of the project. That is the stage at which you now start engaging lenders and even equity investors in order to secure the required funding. And that phase has a cost. The good news is that the project preparation facility can part finance those costs as well to ensure that we do get to financial close of the senior debt. So what you see on the right side of the slide is what you call the project preparation value chain. So the expectation is that the promoters will at least complete the first two phases, the assessment of the enabling environment, as well as the preparation of a pre-feasibility study that will summarize their initial assumption and the concept that they want to present to the bank. Once that's done, we can then work hand in hand with the promoters in order to develop the detailed feasibility studies that are required and go through the entire structuring of the project as well as the fundraising process to ensure that we raise the required funds. So how can we tap into the project preparation facility? I'm going to take you through some high-level eligibility criteria that we consider. Number one is that we can work with government, PPPs, and private sector-led projects. We can support greenfield as well as brownfield projects, and we can also support cross-border or in-country projects. From a sector perspective, we focus on two broad windows, the trade-enabling infrastructure, as well as manufacturing and service export. What we include in trade-enabling infrastructure would be your typical energy, transport and logistics, ICT subsectors. In the manufacturing and service exports, we'll be looking at logistical platform, healthcare, agro-processing, hospitality, and so on and so forth. Now, because of our mandate, there are some key thematical focus areas that you like to see as at Afreximbank. Those thematical areas will be aspects related to regional integration, the promotion of intra-African trade, as well as the enhancement of the competitiveness and resiliency of the continent to face future shocks. Now, we also assess some technical criteria. I will not take you through all of them, but I just want to mention 3 of them. The first one is the investment cost. So when we decide to support a project during the project preparation phase, the expectation is that the project will require at least $30 million for its implementation. The reason for that amount is because we want to focus on large-scale projects that will have a significant developmental impact in the country. Number 2, we will also look at the stage of development of that particular project. As mentioned earlier, we need to have a pre-feasibility study that would have been conducted by the promoters before we come in and support the preparation of that particular project. Lastly, we will also assess, of course, the capacity of the sponsors to ensure that those sponsors have the requisite track record and also have some resources, initial resources that they can also contribute towards the preparation of the project. In fact, one of the requirements is that 30% of the project preparation costs will have to come from them. Now, how is this facility structured? The project preparation facility is essentially a repayable term loan. So it's not an equity investment, and nor it is a grant. So the bank will expect eventually to be able to recoup the investment that would have been made in the project. The amount that we can deploy for a single transaction will be up to $2 million, and it should not represent more than 70% of the project preparation cost. The facility can be denominated in US dollar or euro with a maturity of up to 3 years from first disbursement. Now, how do we exit or how do we get repaid from the facility given the fact that during the project preparation phase, there is no revenue that is generated, right? So the way we structure the facility is to ensure that we can exit at financial close of the senior debt. And practically, what that means is that the first disbursement that is going to be made by the lenders or the incoming equity investors into the project can be used to refinance the facility. So essentially, it also means that it's not coming from the project, nor is it coming from the promoters of the project. However, we do consider some credit enhancement to ensure that you have a fallback option in the likely event that you do not achieve bankability or financial close. So what we see on the screen are some of the interventions that have been supported by the project preparation facility. As you can see, we cover the various sectors, agro-processing, energy, healthcare, and hospitality as well. And it's also spread across the various regions that the bank is covering. So what is important for you to remember for this presentation is the fact that there is a lot of funds that are available within the continent and from outside the continent that is ready to finance well-prepared, well-de-risked project. But the key challenge that you have at the moment on the continent is the availability of steady supply of bankable projects that those investors, including Afreximbank, can finance and in order to support the economic development on the continent. So we will be very keen to engage further after the presentation if you need to have more information about the project preparation facility. So I will end my presentation here, and thank you very much for your attention.
Thank you very much, Nafal Hassani Mohammed there on project preparation. That's the first half of our Afreximbank initiatives to drive intra-African trade. We have 3 more short presentations. One of them, the next one, is actually about PAPS, the Pan-African Payment and Settlement System. But before we do that, I'd like you just to turn your attention. The IATF is, of course, a premier of importance to intra-Africa trade. But what's the narrative? Well, let's find out. Please roll the video.
IATF, the AFCFTA Marketplace Trade and Investment Conference. Connecting African Markets. Connecting market access and opportunity to realize the opportunities of Africa's single market. Connecting markets and industrialization to drive trade and investment in a changing world. Connecting markets to enable business, deepening public-private sector cooperation to accelerate intra-African trade and investment. Unlocking trade for growth via the AFCFTA. Maximizing the transformational potential of intra-African trade and investment. Enacting strategies to unlock coordinated development, building a conducive environment to accelerate AFCFTA implementation, enhancing trade and investment by leveraging the shift in global supply chains, shaping Africa's industrial architecture in an era of supply chain disruption, transforming manufacturing by capitalizing on local and regional value chains, breaking commodity dependence by increasing diversification into new and value-added products, deepening targeted trade and investment, increasing investment in trade-enabling infrastructure, enabling a just energy transition, ensuring food security, accelerating trade and investment, unlocking public-private sector collaboration, accelerating business and economic growth via trading companies, reshaping the gender divide and enabling youth entrepreneurship. There is much to do. United, we can connect trade and investment for greater prosperity. IATF, the AFCFTA Marketplace Trade and Investment Conference. Connecting African Markets.
Now, I'm sure you're no strangers to the sort of news that in Africa it's hard to trade across borders because often you have to source a third currency, be it dollars, euros, or any other currency other than an African currency for African nations to trade, for traders to trade amongst themselves. That's been a big problem. It's been a problem for our development. It's been a problem for our trade between each other. Well, all that is changing, and Afreximbank is having a lot to do with that. The Pan-African Payment and Settlement System, or PAPS, is set up just to do that, for African traders to trade amongst themselves in their own currencies. Now, the PAPS 15-minute presentation is going to be presented by the Head of Products and Business Development, PAPS, for Afreximbank. Please welcome Miss Monica Oraro.
Thank you, Mark. Ladies and gentlemen, good afternoon. We cannot talk about trade without talking about payments. And we can't talk about payments without talking about the African Continental Free Trade Agreement. Sorry, please excuse me as I navigate the presentation. Thank you, sorry about that. Okay, so as I was mentioning, you cannot talk about payments without talking about trade, and trade without talking about the African Continental Free Trade Agreement. And this agreement can be captured in some key numbers. These include the number of African countries involved, which are 55 countries, states of the African Union. Has been working together with the African Union and the African Free Trade Continental Trade Area Secretariat, and this is to bring together payments through the Pan-African Payment and Settlement System. So what are we trying to resolve for? So the key number here, once again, is 16%. Compared to other continents in the world, the level of trade in Africa remains the lowest at 16%. Payments is a key part of this, and the G20 identified 4 areas that need to be addressed in order to improve payments. The first one is access to the need for a bank account, transparency, and that's just making sure that whenever you send a payment, you know how long it takes for the payment to be received, what the payment fees will include, and the FX conversion rate. The third issue was around costs, and the final one was around speed. And this is because today, traditionally, payments go through and amongst these RECs, only 4 have regional payment systems and they operate in silos. So essentially, they don't speak to each other. The second is a costly intra-African remittance system. And what we found is that it costs about 20% more to send $200 within sub-Saharan Africa compared to any other region. The third, a high dependency on foreign currency. And one interesting fact we also found is that when you're sending payments in Africa, they still need to be cleared outside the continent. And finally, a lengthy and costly correspondent banking. So again, compared to the rest of the world, it takes on average 2 days for a transaction to go from one African country to another. And this then brings in PAPS. And PAPS acts as a centralized financial market infrastructure, and it is built for the economic and financial integration of Africa. It aims to address those 4 issues that I just mentioned, dealing with issues like fragmentation by interconnecting these systems, facilitating instant payments, using local currencies, and working with central banks and commercial banks as settlement agents. PAPS is also one of 4 key pillars of the African Continental Free Trade Area. And the 4 pillars are the first being the trade finance facility, the African Trade Gateway, which you will hear a lot about this afternoon, the AfCFTA Adjustment Facility, which is to cushion customs and revenues authorities against tariff losses as goods and barriers to trade are reduced. And finally, PAPS, the Pan-African Payment and Settlement System. This is how it works. So you can have a sender in one country. For instance, you can have a sender in Egypt, and they will instruct their commercial bank in the local currency, so in Egyptian pounds. And this payment will then come to us at PAPS. We will work with either central banks or commercial banks to provide a rate for this transaction so that when the payment is received in another African country, for instance, if it is received in Kenya, it will be received in Kenya shillings, and the receiving company will also receive the money in the local currency. All of this takes place in 120 seconds. This is what our value proposition looks like. So first, in terms of ownership, from the point it was conceived up to its operationalization and the way it's used today, it's a purely African product for us and by us. Its governance is controlled by African central banks, and they sit in our governing councils. And it has international standards from information payments and just making sure that you have the required compliance, legal and sanctions checks, which we're able to do centrally at PAPS, and we're able to do it within our SLA to the market, which is 120 seconds. We also reduce liquidity, especially for financial institutions, to support their end customers, and we do this through multilateral net settlement and using agreed settlement currencies, and we operate 24/7. And the final one is by reducing dependencies on third currencies and correspondent banks, we're also able to reduce the cost of a bank transfer within Africa. So let me take you through our journey so far. We started in 2018, and this was with the development of the system and identifying where we could pilot. And the region we identified was the West African Monetary Zone, which did not have a system at that time. Then in 2019, we got political endorsement through the African Union Heads of States. And in 2020, we built our governance structures. We started an operational rollout in 2021. And in 2022, we officially opened PAPS to the public through commercial banks. And finally, this year, we have expanded our offering to the market, in particular collaborating with the African Stock Exchange Association, and this is to also enable transactions taking place in capital markets. In June this year, we introduced a commercial bank settlement model, and this is to empower the institutions that take PAPS to the last mile, so to the end customers. And we introduced this to the market with 5 of the largest Pan-African banks, which are EcoBank, UBA, Standard Bank, Access Bank, and Kenya Commercial Bank, all having a footprint across all the corners of Africa. To walk you through our ecosystem, and I compare this to peeling an onion to get to the core. So at the very core of PAPS, we have what we call the instant payment platform and ability, and it is built with everything that is required to do a cross-border payment, including managing FX, transaction limits, users, access, sanction and AML, screening and fraud detection, essentially building what is internationally the best standards in payment, and provide an invoice through our system and request a payment for that. We have escrow services, web payment gateways, remittance services, amongst many others. So as I come to the conclusion, I will just show you what our network looks like today. So today we have on board with us 11 commercial banks. As I mentioned at the beginning, we started in the West African Monetary Zone. And so we started with the central banks in Nigeria, Ghana, Liberia, Guinea, the Gambia, and Sierra Leone. And we have since moved to Eastern Africa with Djibouti, Kenya, and Rwanda, as well as Southern Africa with Zimbabwe and Zambia. So in entering a market, we typically work with a switch where they have a national switch. So we have a number of switches, such as the switches in Nigeria, NIBS, GIBS in Ghana, GAM switch in the Gambia, R switch in Rwanda, and ZIM switch in Zimbabwe. We also work with a number of strategic partners who expand our spread across Africa, as well as the number of offerings we can give within certain markets. Today, our network has over 80 commercial banks across the regions where we operate. I will conclude just to show the list of banks that are available to transfer money today. So in Ghana, we have the full list of banks. Similarly, in Nigeria, in Liberia, we have 3 of the largest commercial banks. And in Gambia, we have Bloom Bank. So this is just showing the launch of the commercial bank settlement model that we had in July this year, and the 5 large Pan-African banks that we signed with. This brings me to the end of my presentation, and thank you very much.
Thank you, Monica. Monica on PAPS there. PAPS, give us 2 minutes and we'll give you the African market. Okay, next we move on to a very interesting, we all want to be part of a club, right? The right club. Well, how about the Trader Club? This is a one-stop shop for importers and exporters, but it's so much more. I'm not going to tell you about it. I'm going to ask the head of Trade Intelligence Solutions for Afrexim Bank to tell you about it. Please welcome.
President, who himself, as a passionate economist, recognized that it's not only a lack of infrastructure or investment that tends to impede trade and investment on the continent today. It's a lack of information, where people in one African country don't know about the opportunities in others. And it is for this reason that he conceived our trade remain quite low when compared to other counterparts in Europe, North America, and East Asian countries. And then when we consider that in Africa there are also structural data gaps, where if we look at formal trade data, there are variations between CRF and FOB. Different countries report in different nomenclatures. And then also when you consider the informal sector, where that information tends to be missing or misrepresented as well, this makes it really difficult for the average company to identify the right markets for their products. So for this reason, Afrexim Bank conceived the solution by leveraging our core expertise, our knowledge, our relationships, and given that we, as a trade finance multilateral institution, have the expertise in terms of trade and financing, we really understand how to package and deliver the solution. We ultimately exist to support importers, exporters, and investors in helping them determine the right markets for their products and helping them make strategic decisions on how to access these markets. We have a very clear mission in that we believe insight opens markets and drives trade. So essentially with Trade Intelligence Solutions, we have a dual business model. We are business owners to 2 of the 5 digital assets, under the African Trade Gateway. So the African Trade Gateway, which my colleagues have referred to previously, is essentially an ecosystem of digital assets, two of which are with the Trade Intelligence Solutions team. So the first one is Trader Intelligence, which is essentially an intelligence platform that helps identify opportunities in African countries. Trader Regulations is a regulatory portal that helps to unpack the regulatory barriers and market access conditions that govern trade. On the second side of our portfolio, we also offer a direct-to-company consulting model. So for those companies that have more nuanced information requirements, we work directly with these companies to help develop their African expansion strategies. So this is just a bit about the various different product offerings. Within the digital ecosystem, we also present our various different publications. We produce around 114 publications annually, which cover all country briefs for all African countries, which we update annually and quarterly for the major regions. We have sector studies over 12 key growth sectors in Africa. We have a quarterly currency outlook, a quarterly commodities outlook, and our flagship publication is the Africa Insights. On the consulting side, we also offer a range of consulting services, from basic market research to more complex and nuanced advisory services, such as new product development or export growth analysis, etc. So in terms of our Trader Intelligence, as I mentioned, this is an ecosystem that helps identify where the opportunities are in Africa, from the countries, the trade, the companies involved in the trade, the price points, etc. It's also where we disseminate our various literature products, and it also has, we'll be integrating a B2B hub where importers and exporters within our launched Trader Club will be able to connect with each other. On the regulatory side, again, this is where we have all of the regulatory information around licenses and permits that an average importer, exporter, or investor would need to comply with in the identified markets. Now, on the consulting side, a typical consulting mandate lasts anything from 12 to 16 weeks, and we take a phased approach to developing this offering. In the first phase, we will take a detailed understanding of a company, their operations, their unique profit drivers, and we will create and tailor a macro model that is uniquely tailored to the company's operations. So not only by understanding and taking that top-down approach to what the market opportunities are for that particular product, but also the ease of accessing those opportunities. And at the end of the first phase, we will have developed a tailored macro model that we then showcase to our clients and help them identify and shortlist the top potential markets for their product. Usually, we then present this having done various sensitivity analysis and scenario forecasts to the client, who would then select usually around the top 3 markets for us to then, in the second phase, deliver a detailed entry strategy for the particular company. So this is where we not only look at what the competitive landscape looks like, but also the legal, the regulatory, the various different aspects that the company would need to comply with. But also, more importantly, we look at who are the competitors, what are their price points, so that we help the company that we're working with strategically position themselves to be able to really gain significant market share. Now, the third aspect is really where Afreximbank's Trade Intelligence Solutions has a competitive advantage over any of the other traditional consulting firms, because we're a trade finance bank. Not only have we been financing trade in the continent for now over 30 years, which gives us that unique experience, but also the relationships, given that African governments are party to our bank's agreement. So in the third phase, this is where we really help our companies that we support gain significant traction in the identified markets. And we do so either by introducing them, if it's a FMCG company that wants to meet large retailers in an identified country, we do so. But we also work with investors who, for instance, want to locate and set up operations in an East African community and require relationships and discussions with government, and we help them facilitate those discussions as well. So Afrexim Bank not only has the skills and expertise, but we also have the financial products to help really facilitate and leverage our relationships to help these companies expand in the continent. So these are just a brief about our various different publications, and all of these have been made accessible to you via membership to our Trader Club. So instead of us trying to sell different products and services, we've launched a Trader Club, which essentially is a community of international businesses that would be part of Afrexim Bank's ecosystem, our Trader Club. And of course, they will have access to all the digital portals I mentioned earlier, but also access to discounts on our advisory services, as well as member-only trainings that we will do. We're planning a training to hold on leveraging the practical benefits of the AFCFTA. We also do dedicated networking sessions for various different sectors, inward, outward missions, etc. So within this ecosystem that we are looking to build, we are helping to address and connect importers to the right markets, helping them explore these markets and meet the right partners, empowered by the right information. These are the various membership plans, and they are accessible on our Trader Club, where the URL is on the screen. You can sign up today and leverage, have a look. There are free packages, so if you want to just have a look at our publications or explore our tools, please go ahead and sign up today. Before I conclude my presentation, I wanted to just explain a bit more about the African Trade Gateway and the ecosystem that the bank is building. You've heard about our Pan-African Payments and Settlement System. I've spoken to you about trader intelligence and trader regulations. There's also the MANSA, which is a due diligence repository that is looking to de-risk African counterparts. So anybody who's looking to trade in an unknown market would be able to do so with a modicum of trust embedded in that transaction. So essentially, we are building this ecosystem to respond to our clients' unique pain points. So for those who want to understand where the opportunities are, and a client would access the trader intelligence. For those who want to then also understand what market access rules govern those markets and help select and identify which would be the right market for them to expand, trader regulations has been designed for that purpose. We also have the African Trade Exchange, which is our e-commerce hub that has been underpinned by the AFCFTA's rules of origin and helps buyers and sellers connect with each other. MANSA, as I mentioned, embeds trust into these transactions with unknown entities, given as they explore into new markets in Africa. And we've heard very eloquently from Monica about how PAPS helps to also facilitate this trade by facilitating local currency payments, which therefore de-risk the traditional dollar-denominated transactions that create such volatility for our clients. So I will end with this by explaining that we are part of the solution in addressing and delivering products that are uniquely tailored to all of your pain points. And if you would like to find out more or discuss any of these products, please get in contact with us. Thank you very much.
Thank you, Monica Oraro, there on, Lizanne Case on Trader, We've so far had Odi Akonabo on SME programs, Nafal Hassani Mohammed, project preparations, PAPS was covered by Monica Oraro, and that was trader Lizanne Case. Just one last one to go then on the Afreximbank initiatives to drive intra-African trade, and that is intra-African trade initiatives. For that, we turn to, if I can just get, I want to make sure I get his title right. The title is Senior Specialist Intra-African Trade Initiative at Afreximbank. Please welcome the final presentation from Frederick Siedu.
Quite a bit tall, so I have to raise it up. Good afternoon, ladies and gentlemen. Thank you for being here. Last presentation, and we would be out of here. So it's my pleasure to present to you the various intra-African trade finance products, various programs, various initiatives that have been designed and tailored to ensure that the current very low state of intra-African trade is mitigated, currently at 18%. And of course, we're all privy to research that has suggested that if the Continental Free Trade Area Agreement is fully implemented, as it should be, we would see a 53% increase in intra-African trade within the next 2 years, that is by 2025. And so that is one of the core objectives with which the intra-African trade strategy was designed. And the strategy for us is primarily to ensure that we promote, we facilitate, and we finance trade, not only between and amongst African countries, but also between Africa and Africans in the diaspora. And that is the distinguishing factor for our definition of intra-African trade. We just don't only look at trade within the continent, but also trade outside of the continent with Africans in the diaspora. So we have come out with various financing solutions, various programs and initiatives designed to ensure that we can grow that volume of intra-African trade. But at the same time, we want to ensure that it is anchored around a certain strategic vision, a certain strategic pillar. And that pillar really is to ensure that we are building sustainable country, regional, and continental supply chains. And this really is very important, or the underlying pillar of this strategy, to ensure that Africa on its own can build its own supply chains. And of course, we know why it was important to have this a few, not years, just 2 years ago, we were all caught out by COVID and the disruptions that it had or it brought on to supply chains. We're all suffering the effects of the Russia-Ukraine crisis and its effect on food security. We're all in an era today where we're very much in an era of trade protectionism and friendshoring. And so it's really important that as a continent, we have a strategy that can ensure we promote intra-African trade. And one of the key strategic pillars for us, and which is the arrowhead of Afreximbank's strategy, is to ensure that we promote and finance intra-African trade. And of course, what we then did, or the various products which I will speak to very shortly, have all been designed to ensure that we address 3 key pillars, which we have identified as being the main bane to promoting intra-African trade. So first, due to structural rigidities in our various economies, we cannot trade amongst ourselves. So first, we need to create the goods and services that Africa can trade amongst ourselves. That is our key, or first strategic pillar. Then, of course, once we have created the goods and services, we need to be able to connect those markets. And connecting those markets, or the Intra-African Trade Fair, is part of those connectors, as well as the ATG, which my colleagues spoke to. Then, of course, once we have created the goods, connected the markets, these goods need to be delivered into the market in a very efficient and cost-effective way. And that is where we go to the third component of our strategy, which is to deliver. So I then move on to the various products, financing first. I'll start first with the financing products, then I'll move on to the facilitation financing products that we have designed as a bank to support intra-African trade. So the first of these is what we call the Global Credit Facility for Intra-African Trade Champions. And here, the objective is to provide flexible financing to our largest African corporates. We want to be able to capacitize our largest African corporates to compete with other global multinationals out there. We know very well what it means to compete with other global multinationals. You need access to financing. That financing must be competitive. You need long-tenured financing. You need to be able to give them financing into other markets that they would traditionally not receive from commercial banks. And this is why and how the global facility was designed, to ensure that we are able to provide our African multinational companies, which we call intra-champs, with an opportunity to compete on near equal footing with other global companies. Then, of course, we have what we call the Intra-African Investment Finance Facility. We all recognize, and as Africans, we accept that the low levels of investment is partly the reason for which our level of development is challenged, and also accounting for the low level of intra-African trade. And so what we, under this product, are trying to promote is intra-African investment financing that enables African companies to invest in other African countries. And so we are providing financing for expansion, we're providing financing for acquisitions, and we're providing financing to go into joint ventures with local companies. And this we have done quite remarkably well, including in the financial sector. I see a couple of our clients here who have benefited from these investments that allow other African countries to invest in other African countries. Then, of course, there's the intra-African investment guarantees. This provides contingent guarantees against the various risks that we may perceive against such risks, such as expropriation of assets by governments, against currency convertibilities and transfers. We're in a very difficult times, and so for us as a bank, we are happy to support investors with guarantees that can ensure that their investments in other African countries are guaranteed against expropriation or nationalization by governments. Their investments are guaranteed against such other factors as may include transfers and convertibility, or even in cases where the government fails to honor certain promises that they may have made to an investor going into the country. Then, of course, as a bank, trade finance bank, LCs and refinancing of LCs are very basic. Intra-African investments, intra-African refinancing for that matter. We also do have export-focused, and my colleague Odi talked about SME export focus. Again, we're interested in and have facilities, lines of credit that are available to support companies that want to go into exports, the export sectors. So we provide export financing that can enable companies to package various goods and services specifically for the export market. For packing credits, we're looking at, again, companies that are in the export trading company sector, and we recognize that indeed we need to develop value chains to ensure that these companies can bring in the SMEs, can bring in various companies into supply chains. So we offer financing to, for example, agribusinesses that enable them to go back and finance, if it's farmers, for example. You can finance, you provide them inputs, you provide them fertilizers, finance them, offtake the products, aggregate it, add value, and then you can either sell domestically or export. That is what the packing credit facility seeks to achieve. And it not only involves just exports, but you can do it domestically. Then, of course, the Intra-African Trade Services Support Facility intended to ensure that we provide various import trade services like LCs and others, as well as export trade services and confirmations for trade within the African continent. Then, of course, very important, and this is one that we have piloted with the COMESA in the COMESA region. Today, you are able to reduce the cost of your trade from Malawi to South Sudan by using one transit guarantee. And this we have successfully done. Goods that are leaving Malawi, maize that is leaving Malawi into South Sudan, going through Tanzania, that may also go through Rwanda, Uganda before South Sudan. You do not have to post guarantees at each of these borders like we used to do in a few years back. With this technology-enabled guarantee, one guarantee issued, and then your truck drives through seamlessly to the end of the journey. For contract-related guarantees, again, something we can comfortably provide you with. Happy to engage and support African companies, especially the EPCs that need to issue LCs, bid bonds, retention bonds, advance payment bonds in other countries, sometimes very challenging. If you're an Egyptian company, we've seen that a lot, that needs to do a contract in Mozambique, for example. Sometimes it's challenging to have some of these contracting guarantees or bid bonds in Mozambique, but then with Afreximbank's contracting-related guarantees, we can support you with those guarantees right here into Mozambique. Then, of course, with contract availability guarantees, we are happy and able to work with various exporters to guarantee their supplies to the various off-takers, be it in Europe or in other African countries, for which they would need to post some levels of guarantees, export guarantees. Very important yesterday. Thank you. Very important yesterday, we had a discussion on the mobility sector. So for us, merchant marine, very important. We're happy to support financing to improve the low acquisition or the low ownership of boats in Africa. We're happy to work with you and with boat owners to increase the supply or ownership of boats in Africa to ensure that maritime transport is improved. Fleet financing, the same. That covers all others except for marine. Then, of course, trade and advisory information that we are also able to provide. Then quickly on the trade facilitation, I just spoke to the transit guarantees, an important ingredient in our plethora of products to promote intra-African trade, one guarantee, multiple countries. Then, of course, export trading companies, I spoke to that as well. And for the export trading companies, we're in the process of supporting both emerging ETCs, but also existing ETCs. And this is really a critical aspect to ensure that we develop the continental supply chains, which I just spoke about, to ensure that we integrate and build our own sustainable supply chains as well. Then, of course, the auto sector is one of the sectors in which we are very huge as a bank. We're trying to support, and we're working hard with AAAM to support the development of the automotive sector as one of the last pillars of industrialization in Africa. We're looking and we're working to promote financing as one of the pillars, but also supporting the policy and capacity in the sector to ensure that the relevant policies and frameworks are in place to support that, and of course, developing regional value chains in the auto sector. Creative sector, I met a couple of colleagues here. We're supporting various verticals in the creative economy, film financing, music, sports, arts and craft, fashion and design, and we're able and are working to provide financing and other verticals, including capacity building, as well as linkages, policy advocacy, that will enable the sector to really tap into the huge potential that Africa has under its creative economy. And as my EVP announced yesterday, it's $1 billion fund to support the creative economy. Diaspora, as I said, is part of our definition of intra-African trade. We have not left out our brothers and sisters in the diaspora, and so we're working to support trade and investments between Africa and our colleagues in the diaspora, brothers in the diaspora, as well as supporting remittance-backed investments back or here on the continent of Africa. How to export, again, a training program that we're undertaking to ensure that we can bring and educate as many exporters and SMEs as possible on how to export under the AFCFTA. This is an ongoing program. We have done a couple of trainings across Africa, in Nigeria, Rwanda, Morocco, Zimbabwe, Cote d'Ivoire, and the rest, and still going to expand this across the entire continent. Key for us today is our Intra-African Engineer, Procure, and Construct initiative. We're launching that tomorrow. We invite you to be part of it. We want to ensure that we can increase the level of EPCs, the level of contracts that African contractors win on the African continent. So happy and inviting you to join us tomorrow so we can do that. This morning you were here and you witnessed the signing of 2 agreements with Vista Bank to support bank acquisitions in Africa. We are happy and we have the capacity, the experience to support African banks to expand across Africa and to fill in the void that we are seeing being created by the exit of global multinationals. Then, of course, we are here as one of the key pillars to ensure that as Africans we can connect, and this is why the Intra-African Trade Fair is here. We want to invite you, of course, to our stand in the main exhibition hall. It's a place where we can discuss deals, assess your opportunities, work with you to ensure that we can hit the $43 billion target that we want to close this trade fair with. And with that, I thank you for your attention, and we look forward to seeing you at our booth. Thank you.
Thank you, Frederick Siedu. We had 5 presentations on Afreximbank's initiatives to drive intra-Africa trade. Please give all presenters a round of applause as that concludes the presentations. Okay, we're in the final lap of today's proceedings. We've got one more panel for you. Commodities, they account for more than 60% of the total merchandise exports in the 45 African countries. This means that they're extremely vulnerable to global commodity price shocks. So we have to reduce the dependencies on raw commodities by increasing diversification into new and value-added products. That would play a major role in delivering economic development in addition to increasing the range of goods available for intra-African and global exports. So the next panel is entitled Breaking Commodity Dependence, Diversifying African Trade and Promoting Participation in African Value Chains. To moderate this panel, please give a round of applause to your final moderator of the day, Ms. Vivian Onano, Founder Director, Leading Light Initiative.
Thank you so much, Mark, for the wonderful introduction. Distinguished guests, ladies and gentlemen, good afternoon. Good afternoon. Thank you so much. I'm truly honored to be part of the Trade Forum and to participate at the Intra-African Trade Fair. My name is Vivian Onano. I'm the founder and director of Leading Light Initiative. So we have an interesting panel coming up, as Mark has introduced, on breaking commodity dependence, diversifying African trade, and promoting participation in Africa value chains. And to help us understand what policies, what infrastructure we need, I'd like to welcome on stage my distinguished panelists. Please give them a round of applause as they come on stage. Please welcome Mr. Yahya Elwat Bella, First Undersecretary, Head of Egyptian Commercial Services, Ministry of Trade and Industry, Egypt. Next, Mr. Mudasir Amre, CEO, Union Bank. Thank you. Next, Mrs. Nonye Ayeni, Executive Director, CEO, Nigeria Export Promotion Council. Next is Mr. Mohamed Kasim, Chairman of Egyptian Exporters Association, Expoliink. Last but not least, a very dear friend, Dr. Edem Adzogenu, Co-Chair, Afro-Champions. Thank you. So we'll go right into the conversation for today, and I would like to start with Mr. Yayer. We had a very interesting conversation on how African nations need to complement each other when it comes to industrialization. So what structural transformations are necessary for Africa to avoid the commodity trap for critical minerals?
Thank you so much, and thank you for your invitation. Actually, we have been talking for many years about how can Africa implement industrialization. And we've been talking and talking, but we need something concrete to achieve. What we are looking for, and we are happy to have the Afro-Exim Bank with us. First, we need a database for each single member African country in the African Continental Free Trade Area. A database of raw materials, a database of what each and every country is producing, and we need to put this portal available for the 55 countries. Unfortunately, many producers and many manufacturers in Egypt, they do import many raw materials from overseas, from the US, from Latin America, from other countries, although these raw materials are available in sister African members. So what we are looking for is to have a real industrialization, enough exporting our raw materials. We've been selling our raw materials extremely cheap for decades. No need anymore to sell what I have in a raw material shape. We need to do processing on these raw materials. So we need to support each other to know what we produce, what raw materials each and every country has, in order to complement each other. When I know that DRC is having this raw material, I can import it and produce it in Egypt, then sell it made in Africa, not made in Egypt. As we see in the European Union, we'll sell it made in Africa. Raw materials in Egypt can be produced in South Africa. Raw materials in Kenya, which might be different than what we have, can be produced in South Africa, and so on. So it's very important in order to do our industrialization and to complement each other, to do the accumulation together in order to export what we have to overseas markets. And we can do that through our African Continental Free Trade Area, which will support all the countries in order to produce and to export the goods and to do the intra-African trade and increase the intra-African trade from 15%, what we have now, to at least 40 to 50%. Africa is importing more than $500 billion of imports from overseas, we need at least 250 billion US dollars to be intra-African trade. Also, we need to have a diversification in our manufacturing commodities. So we see who will have the advantage to produce this product, the best advantage in South Africa, so it will be done in South Africa with cooperation with other countries. Another product can be having the advantage in Egypt, so it can be done in Egypt, and so on. This will lead to a higher economic growth, tripling or quadrupling our exports, African exports in the coming few years, and also will increase our bilateral trade. We need to concentrate on our comparative advantages, on what we have, whether in raw materials, cost of production, or processing techniques. And yes, we can do it. Yes, we can increase our intra-African trade. And yes, we can promote Africa much more than that if we will deeply know each other and know exactly what we can do together. Thank you.
Thank you so much, Mr. Yaya, for that elaborate response, but also reinforcing the importance of us exporting as made in Africa and taking advantage of our comparative advantages and coming together as a continent to work. So thank you again.
Thank you.
Coming to you, Mr. Kasim. So Mr. Yaya has sort of told us what we need to do as a continent, right? What we need to have together, the databases, the investment, the diversification. But also there are mega trends in the global value chain, and that is a place where Africa is also affected, right? So how can effective backward and forward development linkages be established in their agriculture and industry to ensure the value addition to the continent's export basket? Thank you.
Thank you very much. I think this is a very important question. And the issue of global value chain and the re-engineering of the global value chain that we are witnessing these days, in order for us as an African continent to do what we have to do, we have to know our position in the world. And in the past few decades, maybe 30, 40 decades, the name of the game was offshoring. Everybody from Europe, United States, Canada, Australia, everybody was offshoring manufacturing to basically where there is cheaper labor and more resources available. We have seen this trend taking place until recently when the pandemic of the COVID-19 and the war in Ukraine called into question the premise of that structure of the global value chain. Basically, now the world is moving from offshoring to what they call nearshoring. And sometimes they call it reshoring, bringing back the production into your country or your own country, which is what Mr. Trump tried to do. And now there is also a third term called the friendly shoring, where they place their investment with like-minded people. So all these dynamics will reshape the global value chain. And I feel Africa is stand to benefit from that re-engineering a great deal. Because for nearshoring, that means the production base will be moved from Asia to closer to the main market. Where are the main markets? We have Europe and we have the North Africa. And Africa actually is nearshoring to Europe as well as the United States and North America compared to Asia. We are much closer to the East Coast than other Asian countries, and we are only a stone throw away from Europe. So because of this, we stand a very good opportunity to benefit from that re-engineering of the value chain, of the global value chain. Another issue affects the re-engineering of the global value chain is the transit, the cost of transit for long supply chain. Not only the money, but the CO2 emission. So now people, if they are thriving to reduce the CO2 emission, then it is very important to have shorter maritime transit, and otherwise we will be emitting a lot of CO2. All these dynamics will lend itself to Africa, but Africa has to be ready to do that. How can Africa be ready is actually two things. One is investment, and we are here with the African Exim Bank, and I think is leading the pack on this issue. But we have also to create other investment opportunities and investment tools to support that movement of production base. The other thing that needs to be done is education. We are a very young continent. We have the majority of our population are in the youth age, and but education is the name of the game. Without education, we will not be able to do anything else. Thank you very much.
Thank you so much, Mr. Kasim. Education is the name of the game. I like that. So I will move to Dr. Eden. Given your vast work with Afri-Champions, the African Union, FCFTA Secretariat, I'd like to hear your perspective on this question. Given Africa's vast natural resource endowment, is commodity-based industrialization a feasible proposition for the continent?
Thank you very much, Vivian. And my response is a tricky one because as I do agree that commodity-based industrialization is what has fueled industrialization in most parts of the world, whether it was the second, third, or first, second, third industrial revolutions. When it comes to Africa, because by the nature of our fragmented markets, by nature of the silos within which we find ourselves, and the fact that the intermediate products you need. So think of it as having I see commodity endowments more like a lottery, right? Whatever you have in one particular country that you can develop, does not necessarily translate into what you're going to get at the end of it, right? Because a lot of the intermediate products you need in that value chain, you don't have. You know, if you want to go into textiles, for example, you don't control the price of the needle, the price of the thread, the price of all those intermediate products. So as much as you're going to say, we're made in Africa, if most of those intermediate products coming from outside the continent are more expensive, or the prices are more expensive or increase, it's definitely going to affect the cost of production of whatever commodities we're adding value to within the supply chain. Makes it very competitive and hard for you to be able to compete globally. So I do argue that yes, commodity-based industrialization is where we want to go, but we have to be very strategic about it from an industrialization standpoint. We have to be purposeful and have to look at where within the continent we have intermediate products that we can bring and create hubs of industrialization that drive and fuel the commodities that we're trying to drive. And I think digitalization gives us a unique opportunity. We keep hearing about leapfrogging. It gives us that opportunity to use materials that many years ago, you'd have to invest in so much infrastructure to do. You don't need that anymore because, you're looking at prices of things like batteries have come down, prices of, the kind of modeling you need to do in terms of businesses, partnerships you need to forge. all of these things through digital tools, you can build models around them and do more predictive analysis in ensuring that you can drive the kind of commodity-based industrialization that is necessary at scale. Thank you.
Thank you so much. So we've talked about commodity. We've also talked about diversification in the conversation that we are having today. So I'll come to you, Mrs. Nonye. Is sufficient progress being made in diversifying the economies of African countries overly reliant in oil and gas?
Okay, thank you very much. I think we are making progress. However, a lot still needs to be done. I believe it's a journey. The most important thing is that the awareness is there. We can no longer, as nations of Africa, depend solely on oil. It won't take us, it does not augur for economic development and industrial transformation. So to that extent, the awareness is there. That's the starting point. And again, the mindset. Everything that you do in life starts with your mindset. And I think that mindset is changing across all the nations of Africa. And I'd like to believe that it's in the spirit of that awareness that we have this conference. That's why we have this IATF, to create that consciousness and that awareness. And then coming down to whether we're diversifying, yes, like I said, sufficient, we're making progress. I believe a lot of nations, a lot of countries in Africa have come up with different initiatives and policies that will help promote non-oil export. I'll start from generally, a whole lot has been done in South Africa with regards to electric vehicles and mining. A whole lot has been done in Ghana with regards to cocoa and even some other commodities. Quite a lot is happening in other countries of Africa. However, I'll come down to Nigeria, which is where I come from. A whole lot of initiatives and policies and reforms have come up by the government. Government is supporting that, and which is why we have Nigerian Export Promotion Council, that's NEPC, which is where what I represent. A lot of initiatives that cut across from the farm gate to storage, to warehouse, to logistics, to creating market assets. So a lot of strategies and a lot of policies and initiatives are coming up. In Nigeria, for instance, I would like to speak to specifically some products. In the previous years, you find out that Nigeria was importing fertilizers. But now, I would like to say that a lot has been done in that regard. We have Indorama, we have some other institutions. And I would say that fertilizer is one of the highest exports of Nigeria at this point. A lot has been done with regards to cement, Dangote cement. We used to import, but we have almost like enough for local consumption, and we're also exporting. And speaking to Nigeria, we have a lot of commodities. We believe, not just only for Nigeria, a lot of African countries, we believe those non-oil exports, we have competitive advantage and comparative advantage. In Nigeria, for instance, we have soybeans, we have sesame seed, cocoa, cashew nut, quite a lot of commodities. However, we need to further explore and exploit it so that we can harness all the opportunities there are. What I see across all nations, and including Nigeria and other nations, is that we are trapped. Commodity, everyone is exporting commodities, raw materials. So we need to begin to, I believe that is being done, how we can actually add value to these raw materials, these commodities, either semi-processed or fully processed. And with that, the earnings of the nations will increase. We increase our revenue in that regard, and then it will create more jobs. It will help for economic development and industrial transformation. So we are doing a lot in terms of inclusiveness, looking at SMEs, gender equality. So you see in that space, you have a lot of SMEs, women, doing a whole lot. And if we continue to focus on it and we put more focus on that, we will do a whole lot. I'd like to see, and I believe that in the near distant time, we'll see a situation where the oil revenues coming from non-oil export will be much more than what we're getting from oil and gas. So we've done a lot as a nation, and I believe that is also what other institutions are. So there's a lot. However, like I said, we've not fully exploited the opportunities. We need foreign direct investment. We need capacity building and a technology transfer to fully harness these opportunities. It's very pathetic when you see raw commodities are exported out of several nations, and then those countries who are the off-takers just add a little bit of value addition, and they bring it back. And we're now spending our foreign exchange, foreign reserve, to buy the same product which we would have done. So there's need for us to look at foreign direct investment in terms of having infrastructural development, having factories, so that we can process these raw materials and we're able to harness the opportunities and earn our well-deserved foreign exchange. Thank you very much.
Thank you so much, Mrs. Nonya. I can feel the passion in your response. Before I come to you, Mr. Mdassir, I would just like to go back to Dr. Edem. Mrs. Nonya was talking about diversification and also how African countries are now banning export of raw materials so that they can be able to add some value before exporting. So my question to you, are Zimbabwe's ban on exports of metal lithium and Ghana's ban on exports of raw cocoa beans examples to follow? And what are the benefits and the disadvantages?
Yes, thank you.
Oh, that is for Dr. Edem before I come to you. Yes,
I was still waiting.
No,
Okay, I wasn't sure either. No, great. So again, as much as we talk about commodities, value chains, and export competitiveness, we also have to look at import receptiveness as well. Because in building capacity to export, we have to also be sure that the entire ecosystem that allows whatever you are exporting to be absorbed in the market. Otherwise, what you're creating, it's value chains that are all prepared and ready for exports with little readiness for imports or import receptivity. So if you take lithium, which is springing up quite, not only in Zimbabwe, but also Kenya, and recently even Ghana, the question is the enabling infrastructure that you need for the drivers of integration to be able to make sure they can produce, add value, and get the continent to absorb it cannot be carried on by the private sector that are driving the integration. And when you look at the beneficiaries of integration, which is also the SMEs, which form a significant percentage of the trading community, or if you like, the private community on the continent, they also don't understand markets outside their domestic markets, right? An SME in Uganda does not wake up thinking how to get his produce into a shelf in Senegal, or the SME in Guinea-Bissau is not thinking about the market in, say, Botswana. And so the way to ensure that this drive towards, and those are the two pillars, the drivers of integration, the beneficiaries of integration, one not having the resources, which are your multinationals, to build a public infrastructure, the other not understanding the markets beyond their domestic markets. And so those cocoa products are only going to be as good as producing locally, and then not really be sure that, in fact, most of it leaves the continent, outside the continent, than even finding markets within the continent, right? So it's really a hand-holding process of ensuring that it's not just the trade agreements, it's not just the policies, because we've had policies like AGOA that have been around for quite a while now, right? But has that really dealt with the gaps in terms of production capacity, energy, value chain assessment, things like that? All of those things just require investments that my sister spoke about and some of the other people in the panel, but mapped out in a way that is very deliberate. So not everybody is doing everything, creating really unique hubs, and then identifying the real value chains, in this case, cocoa. So if you take the billions of dollars of market that the raw materials in cocoa that Ghana and Cote d'Ivoire produces that end up outside of the continent. If you go into all the shelves on the continent right now, 80% of cocoa products, whether it's cocoa powder, cocoa butter, cocoa cheese, cocoa whatever, are mostly imported. If you try right now to even just come up with a deliberate strategic policy to say we want to increase those cocoa products from the 5% local production of raw materials to now adding value locally. Forget about the cost and the energy implications, but just make it a deliberate national policy. Or even make it a policy to a lot of the manufacturing or value addition to be done locally. That could change the game completely and create massive amount of jobs. But then we can't continue to market the same way, right? Even the whole branding, most of these things have to look and feel African. It has to speak to Africa. So there's a lot more beyond just bringing value. And then also the availability of the raw cocoa, because for even the local producers to be able to have, most of these cocoa are normally used for loans years before, even the cocoa that is not even on the ground are already mortgaged for loans. So these are things that we have to keep looking at and ensuring that we are not just aspirational about it, but we're being very deliberate about how do we create the value chains necessary to drive the industries that we, but also realizing that it's not about just exports, it's also about import receptivity, and finally also capacity, building the capacity. So we don't end up importing all our engineers, we don't end up importing all our, especially in the case of lithium, for example. Are we producing those talents we need in our universities to be able to, or in our polytechnics, to be able to make sure that we can absorb the value chain, the investments that are going into that value chain. Thank you.
Thank you so much, Dr. Edem. I think something that's cross-cutting in your response is the importance of capacity building, ensuring that we have the manpower and the human capital to be able to help us with the diversification, but also the improving the value of our communities. So thank you. So I'll come to you, Mr. Mudassir. We've talked about Africa and just somebody who's worked in different markets apart from Africa. So what lessons can Africa learn from Malaysia's transformation from a commodity-dependent to a diversified one through resource-based industrialization? Thank you.
Good afternoon, everyone. And thank you for the opportunity. So listen, this entire discussion sounds to me like a deja vu, right? I have seen this before, and I will give you a few examples that I have done this. So working in various countries where I have seen this transition from primarily commodity-based to value addition is Malaysia, Brazil, Mexico. These three countries have, to some extent, has achieved success in this. And this all started when they did the national, Malaysia specifically, when they started the national industrialization master plan, right? Somewhere around late 80s, early 90s. What was done was that basically, methodically, they have done the deletion program for the import substitution and value addition program for the exports. Now, when I say methodical, sorry, can you hear me? I could.
Can we do something about the voice? Because the echo, we cannot hear anything.
Hello, can you guys hear in the front?
Yeah, they can.
Okay, thanks. So I'll just continue. Okay. So that methodical deletion program and value addition program was the key of that entire master plan. What does it does is, for example, take the example of cocoa, right? He said. So yes, today probably if you look at it, the total chocolate industry across the world is about $400 billion, right? Africa is getting maybe 4% and 5% share out of it, while the basic raw material is provided from here eco. However, if you just see the difference, it's very misleading, right? That you say, okay, we know we should get, that 400 billion market share. Because that is a different story altogether. When you are exporting cocoa, you are basically dealing with traders where buyers are running after you. When you talk of finished product selling, you have to run after the customer. It's a different ballgame altogether, right? Your branding, your quality, your consistency, your taste, your R&D, all of that goes into it. That cannot be achieved in one day or in 1 year or 2 years. There has to be a policy, consistent policies and methodical policies. So what they did at that point in time is that for everything they said it was defined, right? So for example, if you are exporting just palm, right? Palm oil. So every year they did 20% value addition export requirements, as a policy. Okay, today you are exporting X price, tomorrow your price will be X plus 20%, whatever, right? So that gradually gave them the room for the businessmen also and the business community to plan to develop that just exporting palm oil into a value-added products marketing. So today then they started in sachets or whatever, they are exporting. So it's a value-added product than branded products that they are exporting. Now, similarly, when you do import substitution, because this of course talks about import substitution as well. We are exporting a lot of, from the Africa, we are exporting a lot of this which comes back, as value-added products. That also has to be done through a deletion program. We have seen some countries have put restrictions about processing, right? You cannot export raw XYZ commodity and you have to do, primarily processing. But in many industries, we have seen that, that probably, for example, even if you take auto industry, we have seen various auto plants, right? How much actually manufacturing is happening is still debatable. We see a lot of everything is being imported and assembled in Africa, which we call this thing. So those deletion programs has to be precise and has to be very precisely defined. And it has to be a 10-year program or something. So I think that's key. And the other thing which you will not find in many of this, which I felt at that point in time, is the entire culture. She mentioned about mindset change. It is a mindset change. Because as I said, when you sell finished products, it's a different ballgame. You're targeting individuals, you're targeting a different market. It's a service mindset that you have to bring in. And it has to be done, understood by regulators, by labor, by your businessmen, by general public, everyone. It's a cultural change which brings, these value-added products that you see or the branded products that you see across the world. There's a lot that has gone into this. There's a lot of R&D which has gone into this. It's years and years of, hard work which has gone into this. So I think we have started a good journey. Awareness is there, which we can see as a positive sign. We see as a positive sign that many of the countries, whether it's, Ghana, Cote d'Ivoire, etc., they have come up with restrictions in terms of exporting raw or this thing. But I think there's a lot more to do in terms of gaining the real benefits of the value addition. Thank you.
Thank you so much, Mr. Modise, for that elaborate response and also reinforcing the importance of the mindset shift when you talk about this. And I think education comes into that too. So I know we're almost running out of time. So my next round of questions, 1 minute each, please. And I'll start with you, Mr. Yaya. So my question to you is, how can the Africa Continental Free Trade Agreement promote Africa's industrialization and accelerate the structural transformation of its economies?
Thank you.
In a more realistic way.
Yeah. As I've mentioned before, and as my panelist colleague mentioned, we need to know each other. We need to have a database for our natural resources. We need to complement each other in first, we need to know the national. We need to have national and regional complementing each other. National, as each and every country should know, the manufacturers and the raw materials exporters should know each other and to complement each other in order so we can go regional and complement each other regionally. We need to have vertical and horizontal industrialization plan. That can have another 5 to 10 years. But as I mentioned before, if we couldn't start from now, it would be hard as world is going tough. The competitiveness is very high. So yes, the African Continental Free Trade Area is something very big and we are all aiming for. 47 countries finalized their ratification. We started trading with each other among 8 countries from the 47 with 0 customs. but we need the implementation to be among the 54 countries in the coming 2 years. So I'm urging the leaders, I'm urging the governments enough to decrease the red tape, demolish the bureaucracy in order to complement each other, industrialize, whether industrialization, complementation, in order to have the regional trade to enhance our intra-African trade from 15 to 40 to 50% in the coming 15 to 20 years. Thank you.
Thank you so much, Mr. Yaya. I'll come to you, Mr. Kassim. Beneficiation is a perennial topic. When will it be a norm across African commodities?
Well, let me give you an example of one commodity that Africa is known for, but it's used less and less inside the continent, which is cotton. Mm-hmm. Cotton is produced in many countries in Africa and exported raw. So what do? We need investment in the upstream. We need investment in spinning. We need investment in weaving. We need investment in dyeing and finishing. Because at the end, cotton is used to produce clothing. The clothing is the downstream of that supply chain. Mm-hmm. So before we reach clothing, we need to invest in the upstream. And as Africa Cotton and Textile Federation, and we have the chairman here, Dr. Adam, we had the idea of creating clusters for textile parks where we can host spinners, weavers, and dyers and finishers across the globe. And we have them distributed on East Africa, West Africa, North Africa, and South Africa. However, all these plans are lacking investment and lacking national will, if I may. Perhaps the plans looks attractive when we make a presentation. It's very enticing, but we need to put our will and our money behind it. Thank you.
Thank you so much, Mr. Kassim. I'll come to you, Mrs. Nonye. Which sectors have the most potential for accelerating African participation in the global chains?
Okay, thank you very much once again. I will say that there are a lot of sectors. It's not just one sector, a lot of sectors. But I'll start by saying the agro sector, agro and agro-allied. I believe this is a sector where many nations in the continent have comparative advantage and competitive advantage. We are endowed with a lot of natural resources across all the nations: cocoa, cashew, sesame seed, gold, everything. We have a whole lot. And if we're able to develop them further and add value, adding value is very critical in that growth. You know, if we continue to just export raw materials, like I said, we will not grow. So we need to add value. And in doing so, like I said earlier, we attract foreign direct investment. But why won't we get some of these multinationals to set up their factories where the raw materials and the raw commodities can be seen, can be gotten? So more of agro and allied. And I would like to talk about services. Services is also another area that has a lot of potential, huge potentials. And when I'm talking of services, look at the health sector. We have a lot of greens, herbs, plants. All of those are resources in terms of pharmaceutical industries. Why can't pharmaceutical industries in different countries come and set up their pharmaceuticals in some of the nations where these herbs and plants can be seen? Then we now move away from health and say, look at ICT. What's happening in the fintech space? We have a lot. That's another. We can export some of these services. We have a lot of fintechs that are operating outside their nation, some in London, some in Europe, in America. Those are exportable products, services that we can harness and earn some revenue as a nation. Talk about football. You talk about football, then entertainment. Entertainment is also another area that needs to be harnessed. Then you talk about movies. I will speak specifically to Nigerian movie, the Nollywood. Everybody wants to watch it. So can't we export that? Then we talk about fashion. Fashion is very key. It's an area that we need to explore and exploit. I think that's it. Thank you very much.
Thank you so much, Mrs. Nonye. Mr. Mudassir, you basically have 30 seconds to address my question. So which African countries are taking the long-term view in the exploitation of their natural resources, and how are they doing it so that others can learn? Mr. Mudassir. Thank you. 30 seconds.
Sorry. So listen, as I said before, I think it's important, first of all, you know, from a value addition perspective, still I think the continent definitely needs expertise, right? So we need technological, you know, agreements, and we need technological transfer. However, that has to be done slightly methodically, again, I said. You know, which means that you can have those agreements today, but have 5% dilution every year. So in 20 years, you will have 100% dilution, right? For foreign shareholdings, etc. Okay. So those kind of agreements that we do for foreign shareholdings needs to be done in that fashion. Now, apart from that, we talked about, and I said earlier, you know, the service mindset, you know, the cultural change, and, you know, for the finished products. I think that's the key. Because what I think we have seen in other places as well, what lacks is the quality control, the consistency in supply. That matters less when you export commodity, but that matters most when you export finished goods. Thank you.
Thank you so much, Mr. Mudassir. I think now we're about to wind up our panel session. Mr. Kasim requested for 5 seconds.
Yeah, actually I requested 10, but it's okay. I cannot leave the panel without inviting Afri-Exim Bank to join forces with the industries, particularly our textile industry, and start thinking on Pan-African strategy for the textile industry. We are ready as Africa Textile Federation, and we will be happy to hear from the Afri-Exim Bank.
Thank you, Mr. Kasim. I'm sure the message has been well received, and Afri-Exim Bank will definitely reach out to you. I'm not a spokesperson for the Afri-Exim Bank, though.
The bankers on the panel, too.
Yes. For us to break the commodity dependence, I think we've had a lot from our distinguished panelists on investing. We need more investments. We need the infrastructure. And importantly, we also need to change the mindset. Education, education, education. So please give a round of applause to my distinguished panelists for the wonderful discussion that we just had. Thank you so much.
Okay, ladies and gentlemen, thank you very much. That is the final panel, but we have one last thing to do before we break for some refreshments, and then you're invited to go to the Country Day, the Industrial Day Arise IPP is holding. But before we do that, we just have 2 more deals to announce to you. The first deal, if I could ask the panel to vacate the stage, please. Vivian? Let's everyone shout Vivian. Okay, thank you, she heard me. Okay, thank you, Vivian Onano, there for an excellent panel to wrap up our panels. 2 more deals to reveal. The first deal is in the amount of $150 million. I'm going to ask my colleagues to bring the obligatory desk, chairs, pens, please, wherever you are. If you could bring the furniture out, my colleagues, please, so we can have these two deals. The first of which is for the United Bank for Africa PLC, and it's $150 million US trade financing facility. If I could have the chairs, I don't see my colleagues here. Ask and ye shall be given. There you go. Okay, here comes the table. So I'll just tell you a little bit about this. This is a trade finance facility agreement, and Afrexim Bank is availing the United Bank for Africa this facility of up to $150 million under the Ukraine Crisis Adjustment Trade Financing Program for Africa. The Ukraine Crisis Adjustment Trade Financing Program for Africa, or UCAPFA. Now, this facility shall be utilized to finance trade and trade-related transactions in support of UBA clients to facilitate increased financing of trade businesses in various sectors of the Nigerian economy, thereby mitigating the adverse effects of the Russia-Ukraine crisis. In order to sign this $150 million trade finance facility agreement, I would like to call on Mr. Adeleke Adeyemi, the Group Treasurer at the United Bank for Africa. Please give him a warm round of applause. Mr. Adeleke Adeyemi, the Group Treasurer. And joining Adeleke is our own Afrexim Bank's Executive Vice President for Finance, Administration and Banking Services, Dennis Denya. Dennis Denya. Now, gentlemen, as you take the stage, I will tell people a little bit more about this. I know we've got our lawyers are in the house with their pens and their documents, and we have some witnesses as well. You're all very welcome. Please join us. Now, as I said, this facility shall be utilized to finance trade and trade-related transactions. No. But I don't think, let's find out. Maybe it's just, yeah, they need to tell me. Okay, I'll just tell you a little bit more about this facility. UBA is one of the partner financial institutions with long-standing mutual beneficial relations with Afrexim Bank, and the facility is expected to provide the much-needed foreign exchange liquidity at affordable pricing to UBA, who in turn will utilize the facility to provide trade facilities to their customers. The funding is driven by an increased demand for trade finance support to UBA's clients, which will enhance confidence in the settlement of international trade transactions for strategic imports such as food, medication, and agro products. This is pivotal to Afrexim Bank's mandate for supporting SMEs, particularly those in the manufacturing sector, to be able to increase production, thereby supporting economic growth and development in Nigeria. I should clearly state, actually, I mentioned the wrong signatory for UBA, so I'm going to correct myself. The signing for UBA is the Group Managing Director and CEO, Oliver Alawuba, the Group MD and CEO of United Bank for Africa. Gentlemen, congratulations. A round of applause, please. Now, one last deal to sign. The leading iron ore producer and exporter in the Republic of Congo is a company called Sapro Mayoko. Sapro Mayoko. Today, Sapro Mayoko will sign with Afreximbank $96 million US dollar iron ore mine development facility term sheet. To sign for that, I call on the Chief Executive Officer of Sapro Mayoko, Mr. Paul Obambi. Signing for Sapro Mayoko, Paul Obambi, CEO. Give him a round of applause. He's one of our last signers. And on behalf of Afreximbank, my dear sister, Mrs. Kanayo Awani, Executive Vice President, Intra-African Trade Bank, Afreximbank, with colleagues. Those are the two signatories. We're very excited about this $96 million iron ore mine development facility. It's to Sapro Mayoko, and the facility will enable Sapro Mayoko to increase its production and export capacity and to improve the quality and efficiency of its operations. It will also support the development of the iron ore sector in the Republic of Congo, which is one of the largest and most untapped sources of iron ore in Africa. This financing will have a positive impact on the economic and social development of the Republic of Congo. It'll create jobs, stimulate economic activity, and improve the living conditions of the local population, especially in the Niari province, where the Mayoko mine is located. The deal will have a positive impact on the regional and continental development as it enhances the connectivity and trade potential of the Republic of Congo and its neighboring countries, especially Gabon, as it will support the implementation of the AFCFTA, which aims to create a single market for goods and services in Africa. Ladies and gentlemen, the $96 million term sheet on iron ore mine development facility is signed. Congratulations, round of applause. Now, my dear audience, that was the last of 11 deals and MOUs that we've signed just on the first day. And this is more or less the end of the first day in this hall. I want to thank all of you that are still here for staying with us. Now that the deal signing is done, I would invite you to step outside for some quick refreshments, afternoon refreshments, and then please head to the conference hall. Here in Al Manara, you just go out and then you turn right for the Country Day. Industrial Day, Arise IPP, the Special Economic Zone Kings, will be putting on the Country Day at 4:30. So that's roundabout in about 10 minutes or so in the conference hall here in Al Manara. Go out and turn right. But before you do, grab yourself a coffee or tea or a juice and a small something to nibble on. 4:30 Country Day. And then tomorrow, the schedule begins again at 9 a.m. I'll see you then. Good day.